Why on earth did tsly or Yield Max do a $200 calls when the closing price was at $199.95 on Tesla? Let's talk about it. This is Mike, the tactical stock scalper. All right. Retire on Dividends called me out to kind of explain this in his latest video, so I want to kind of get into this here. Okay, the $200 level is major resistance, and I want to show you why, and then we're going to tell you why they didn't select another call price or another strike price. So let's kind of go out here to the weekly time frame. Let's start here by zooming out. All right, so as we see here, let's zoom out. Start here. Tesla obviously has been in a downtrend. Let's zoom out a little bit more for 2 years. So there's a lot of downward pressure on Tesla. There are shorts piling in at every single pop, driving Tesla back down. Okay, so we know that. Do you see the purple line here on the bottom? That is the 200 period moving average. That is a very strong moving average. And I will tell you this, when I see tsly calls and the calls they make, oftentimes it lines up with resistance of some sort or another. Well, this one on your $200 call, it's very strategic in why they did this, okay, and why they didn't go any higher. And I'll show you why. We need to worry about 3 zones currently on Tesla. We have the 180 level there at the bottom, right? As we see, Tesla was been trading range bound for 3 weeks in a row between 180 and roughly 200 after earnings. We have a gap right here. Let me show you this. I got a lot of lines on here, so please stay with me. We have a gap right here. You see that gap? That was from earnings, okay? So we drop below. That means there's a lot of dead space in between. So Yield Max, in my eyes, basically had 2 options. They could place their call at 200, or they could place it at 210, because if Tesla gets above 200 and stays above 200, it's going to go to 210 next week. They're going to fill the gap. Okay, so they had 2 options. There's no sense to put it at 202, 203. And what would the yield be if they put it at 210? What would the premium be? Well, it wouldn't be nearly as good as 200. So they're kind of in between a rock and a hard space here, because it makes no sense to do it at 202, 203, 204, 205, because that will get blown through. So in my mind, they're trying to get the most amount of premium with the best risk reward. So what they're thinking here, in my eye, obviously I don't work for Yield Max and I haven't consulted Jay on this, but I think they're saying what I'm thinking, what I've been talking about with Tesla for the last week, is that this $200 price tag, let's zoom out here to a weekly time frame again, okay? This $200 price tag is major resistance. And I think they're playing the odds here. They had a choice between 210 and 200. 200 gives you the best odds of a pullback back down into the channel. Because what typically happens when something comes up to test resistance, which is a $200 level, sometimes it takes a couple times for it to come through. Now let's look at some past history of the $200 level. The $200 level is that middle line, or that top line that you can see here between the 180 and 200 zone. As you can see many times in the past, let's shoot here, it has been support, like right here, right? Been support here. It's also been support here, right? So we can see that it was support there at $200, was support over there for $200 level. And then you can see over here, 180 and 200 also, right there, acted as support, right? So they really had no other option if they're trying to capture premium to go at the $200 level. Now, I've been talking about this for quite some time, and I think what I'm seeing is Tesla will get rejected at the $200 level, like we have seen it happen, like we saw it happen Friday. I expect it to come back down to maybe the 190-ish level, and I'm going to show you why. What we did here was create a higher high. Okay, so let's get rid of some of these lines. So now that you know these zones that they are probably looking at. So let's remove a lot of these trend lines here, or these, they're not trend lines, but a lot of these lines here, okay? And let's clean it up. Okay, so what they did, what happened here with Tesla is at the $200 level, right? Here, it created a higher high. Now we're looking, and it couldn't, I mean, it broke the 200, but it's coming back down. It is now using the 20-period moving average currently as support, which is that white line. But what I think what's going to happen is it's going to come back and form a lower high. So we see this, or a higher low rather. So let's kind of do this here. You see this right there? That low is higher, right, than this low right here, right? So we can see Tesla starting to build. We formed a lower low, then it formed a higher low. Now I think what's going to happen is it's going to get rejected here at the $200 level and come back down and form another higher low. So it's going to, in essence, it's going to look like this if you were to actually put a trend line on it. Let's go right here. See that? See how we're forming higher lows? It's going to come back down, I think, to this 190-ish level and form a higher low. And we're going to collect some more buyers and then maybe on the second attempt, break the 200. But again, let's erase some of these for a second here. They had no other option than a 200 level. Either that or they're going to have to put it at 210 at the gap fill. And the premium there just probably isn't enough to get the 50 to 60% that tsly likes to boast. So they're in a rock and a hard space here. And I can see why they placed the $200 call, because there's massive, massive resistance there. Now, that's not saying it can't get broken. You see that purple line, the 200-period moving average, right on the 200. Let's go at the monthly time frame. See the green line, the 50-period moving average? Algorithms, hedge funds, and all that use, EMAs to place their trades. At $200 level is massive resistance. Now, that's not saying it can't get broken. The market doesn't care about support and resistance levels to a point, but it does respect them from time to time. So that's why they placed their calls at the $200 level, because they had no choice. Otherwise, they would have to go to 210. And would the premium be worth it? Would people be upset? Yeah, you'd get some share price appreciation from tsly if it went up to 210. But what would that premium yield, right? Would people be upset? Now they'd be paying like maybe 30% or 35 or 40%. And could you imagine how upset people would be? Pretty mad, right? This is yield max, right? They want the most yield possible. So the $200 at the money call, this is why they did it. Massive resistance at the $200 level. If they didn't place it there, they'd have to place it at 210. So that's why they did it there. They're expecting it to come back down and stay within its channel between 200 and 180. I hope that makes sense in what I see and why I think they are making these moves, or at least this current move that they're making. Hope you enjoyed the content. This is Mike, Tactical Stock Scalper, out.